What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. In today's episode, I'm joined by Christian Carreon, also known as Trading Boxes. He's a systematic trader who developed the Trading Boxes strategy while overcoming a lot of challenges and adversity in his personal journey towards success. In today's episode, we explore Christian's background and the origin of the Trading Boxes strategy. We'll discuss the importance of a systematic approach to the markets and why it's crucial to bridge the gap between planning and execution, and how to adapt to varying market conditions. Join us as we uncover fresh insights and tips that can help you develop a consistency and effective approach to trading the markets. Let's get started. Today's podcast is sponsored by TradeStation. As a futures trader, you can leverage your portfolio even more thanks to TradeStation's reduced margin rates across popular futures products. Enjoy intraday rates as low as 10% on select U.S. index futures. TradeStation is also cutting margin rates in half for popular energy markets, crude, heating oil, gasoline, and their associated minis. Open an account and access over 600 CME Group futures products and customize your trading strategies on a sophisticated platform built for advanced traders. Visit tradestation.com/Anthony to learn more. Christian, great to have you on the show today, my friend. I've been looking forward to this for a while.
Likewise. Thank you for having me on. It's both an honor to speak to you and get to know you a little bit more about you, and pleasure to be on here with you guys.
Yeah, man, you're an inspiration to me. I've been following you for some time. I actually heard your podcast with Chat with Traders a year back or so about your background, the health issues that you've had to deal with. You've done amazing with your health and a turnaround. You've done unbelievable with your trading. And so I think that, you're an inspiration to me for sure. And so it's really great to have you here today. And I know that you've already kind of gone over your entire background on a couple of other podcasts, but I think it's important today for people to understand, Christian, the man, what you've had to go through to get to the point to where you are now. So I think we just have to start there.
Yeah, absolutely. So, long story short, I've gone through a little bit of challenges throughout my life, health-wise. I've gone through 2 kidney transplants. There's a whole story around that others can read somewhere else. But it started in Mexico. My kidneys failed. My sister's kidneys failed. She ended up passing away, unfortunately. And then I was lucky that I was able to be a match with my mom. And even though we did dialysis for a bit, for 6 months, we were able to go through the transplant and save me, right? Pretty much my family was worried if I was going to live or not based on what happened with my sister. And after we went through the transplant, got back to normal, or what we thought, we just kept going through the years, going through high school, entering college, going through some family issues. My family was broken spiritually, mentally, physically after 10 years of trying to save my sister. And then part of those 10 years trying to save my life. During 2008 was when I got my transplant. 2008 happened, the economy collapsed, and all the savings and money that my parents had that were used up to saving my life, we didn't have any more during 2008. And so my mom, being a small business owner of a hair salon, she couldn't keep up with the payments. The clients weren't there. Part of her keeping the business afloat decreased because of all the dialysis and doctor appointments that she would be taking me, right? So the combination of this life event happening and the economy sort of collapsing during that time really affected my family, and sort of is the starting point of where I wanted to say, hey, I need to find a way to create residual income. That was my goal, is how can I create residual income for the future so I can not worry about my income if my health decreases again. If I have to go through another transplant like I did last year, can I have some income coming in so my parents don't have to worry, I don't have to worry. The same things that happened in 2008 don't happen, right? My parents filed for bankruptcy. My parents sold their businesses. We all went through our different coping mechanisms. Depression, right? My mom developed a gambling addiction. My dad became a workaholic and he started drinking a lot. And I since there was nobody at home, I found my love through the streets, and I started hanging out in the wrong groups, doing wrong things, and I ended up in jail a week after my 18th birthday. And sort of that sort of whole picture came together for me and said, hey, I really need to do something to get ahead. I have a second chance at life. I shouldn't be wasting it here, hanging out with this group in this environment. So after I got out and went back home, I realized, hey, I need to do something to really help my family out. Like, they're suffering, I was suffering. And that was the start of probably me committing to going to college, getting a degree in finance, taking a class on options and futures, and really learning what that was. And from there, it sort of started this passion to see how I could make it in the markets. And this happened in 2010. I started getting involved in the markets. I started losing a lot of money because I didn't know what I was doing. But little by little, right, I still kept going at it. There was a lot of pain there in losing the money. And my parents, even my parents and friends were telling me, hey, you shouldn't be doing this. Why are you doing this? But nobody really understood the pain that I felt of my family losing everything when my health went down. So I kept going at it year after year. I lost $15,000 my first year. Eventually, I started losing less and less. By my fifth year, I became consistent. I finally broke even. And ever since then, I've been able to make money yearly and really help out the people that I wanted to. Eventually, I graduated college. I started working for a company called Medtronic, who engineers insulin pumps for people with diabetes, because I wanted to help people with their health after everything that happened with me. And a short while after, I realized that, hey, people actually need more help with their finances and financial literacy, because even though their health was going down, they had to file for bankruptcy as well because of all the credit card debt, all the mismanagement of either cash or the medical bills that were piling up. And so I realized that even though health was important and super important, as you know, and I said, no, I need to do something where I can help people with money. I combined my passions for both trading and helping people by becoming licensed, and I became registered, and I joined the investment advisory world. I became a financial planner. I moved around from firm to firm. I then eventually started my own in 2017 with a friend from college. And after a couple years of doing things together, we separated at the end of 2021. I started my own since then. But through that, I've also done what I've could to help others on the trading side. I've created an approach through years of historical studying, back testing, that's based around a contraction and expansion of structure, right? What I've called boxes. Well, we all know boxes from Nicholas Darvas. And that's sort of what took me to consistency and profitability for both for me and for the people that helped me. It changed my life. It continues to change my life yearly as I reach new highs. And little by little, I share what I can on social media to hopefully pass that on along with other people and help them get into a place where they can both create the life they want for themselves and their families. It was a long journey. It's still a long journey. It never ends. And super thankful for where I'm at now in life.
Well, I'm thankful for having the chance to meet you and to speak with you. Like I said from the beginning, you're a true inspiration. And the adversity you had to fight through, I don't even know what to say about it. I don't know you that well, but I know that you followed me for a while. And I just want to say I'm proud of you. And I think that,
Thank you.
I really think so highly of what you've done, because this business is so difficult in its own right when you're
Yeah.
dealing with health issues, family issues, all the things you've had to deal with. I know a few other friends that have had some health and family issues that have also had to fight through this. Nothing to the extent that I've heard with you. It's probably by far the most difficult path I think I've heard from anyone. And the one thing I take away from you day in, day out is your positivity. I mean, your positivity is absolutely, it's just fantastic. It's just one of those things where I'm the eternal optimist, right? I mean, you read my
Yeah.
note. I mean, you put a lot of alpha out on not only on Twitter, but you do it on my Discord as well, which I appreciate you being there. But you're constantly a positive person. You're a positive influence. And after everything you've been through, how do you stay this positive?
Well, it all starts with finding gratitude that I'm not in the hospital bed wishing that my health was better to do what I want to be doing, which is this. So I'm in a place through that mindset that I can show up and do what I do daily. This is the world for me, right? I've been at it since I was 20. I'm 34 now. I'm helping people. I'm helping myself, my family. And what's there not to like? what's there not to love and be so passionate about, to show up daily to what you're doing? Not a lot of people get the chance to. Not a lot of people get the chance to do it this long. And as long as I continue to find gratitude in that health, there's no other outcome than to be optimistic about the future. And regardless of the ups and downs that we go through, it's the sole act of doing this daily and being here that just means the world for me.
I think the most powerful word you've said so far today, and I hope everybody takes this with them, is gratitude. It's so important because in my personal journey and in years, gratitude is what's kept myself positive as well. And I've nowhere near had to go through what you have gone through. I think that gratitude is such an important part of trading because let's face it, we all have to be thankful to be able to do this business, right? Just to be able to be in this business, we have to show gratitude. And after all the health and all the other things that you've gone through, I've gone through some stuff, other people as well. Gratitude is what carries us forward. I mean, thankful to be in this position, and every day is a new opportunity. I want to talk a little bit about the boxes now, because one of the things I found very interesting that you've put out as I've watched you over the years is, you frame things out, right? Frame it out, box it out. I'm very similar in the way my structure is. I know that you see that I look at that in a very similar way. And this is something that I didn't learn from anybody else. This is something that I looked at, and I looked at the market and said, I just see the market in frames. Like I look at areas, ranges, right? It's just the way I look at the market, right? How did you come up with this trading boxes strategy?
So I came to understand that these moves in the market come from a contraction to expansion pattern or structure, right? We go through these periods where price needs to create energy, it consolidates, and from there we start a directional uptrend or downtrend. And it's through that main structure that I've developed a way to say, okay, this is where I should enter, this is where I should put my stop, this is how I should trail a long or short. But it really comes down to that structure. It's if the market moves in three directions, it's either in an uptrend, a downtrend, or no trend. What do we need to, as this trader, identify the edges of that range to then say, okay, this is our consolidation, this is our box, and then we need to identify what triggers a breakout or a breakdown. And then something further is identify what will be our risk defined entry to potentially capture that breakout and not get caught in a failed breakout or a reversal. And it's really that foundation that then you start, adding parameters, adjusting those parameters through a feedback loop that you enter in your trading, and eventually through time. And if you're applying yourself consistently, you should be able to identify the best parameters that will help you participate in the break of that range, of that box, and ride the trend.
So do you think that strategy is something that you found to fit your personality, to fit your style? Did you basically come up with that to fit it to your personality or your style? Or did your personality and your style lead you to find a strategy like that? Right? I'm wondering what came first, the chicken or the egg?
It was definitely the approach that fit my personality, because I found that I was not good. Well, I would say not good, but I was just not aware at that moment of the right parameters for a mean reversion approach. And so I decided to say, okay, if I am the kind of trader that needs to be patient with an entry, needs to wait it out and see if it's going to have follow through or not, then I need to apply a trend following approach. And that's really this idea behind this box system, is that it's a way to allow you to participate in the trend, have the market do the heavy lifting for you, because once you're positioned in that trend, you really just need to trail your long or short. And I found that to fit me perfectly, because I don't want, whether it's day trading futures or swing trading stocks, I believe that the market will continue to go up over time. And if I identify those areas where I can participate in that trend and capture a big winner, that's going to pay me tenfold over, not every time, but a consistent approach of these parameters. I will find consistency in finding winners that are 6, 7, 10 times my risk multiple. And that fits me extremely well.
Yeah, I jotted down a few things because we're very similar in the way that we look at the markets, right? Our approach might be different, our execution might be different, but the way that we look at the
Yeah.
market, I think is very similar. We're visual. We like to see a boxed out range. I think personally that just helps me. That's part of the reason why I went that route. I think it sounds similar to you. We like range. You want to know contraction or expansion. What type of environment are we in? It's so important. And when you know that, when you box out a range, it gives you the visual of how to go about and execute that market. And I think time frame is also extremely important, that it keeps you from over trading in a very short time frame. We used to call it trading in our own personal fast market. The pit, or the guy who's trying to, scalp for a tick against the grain every time the market's making a breakout high or breakout low, because you visually don't have something framed out. And so therefore you get yourself caught up into too much into that. Talk to the traders out there that are trying to find a strategy or style that actually can slow them down and become better executors the way that you've done.
So, I'll start off by saying that as a beginner trader, you do need to slow down your thinking process as you approach a trade, as you look to enter a trade, and then as you're in a trade. And it's helpful to do this because if you are applying a approach or setup or a time frame that doesn't give you the time to properly think out the scenarios of looking for an entry or waiting for an exit, then you are going to find yourself trading in and out in an area where if you just had put on your trade and left it there, you probably would have found a profitable trade. But it is the lack of time in your thinking process that you cut yourself off from really seeing that trade play out. And we see this, we're saying, oh, I took profits too early. Oh, I thought it was going to reverse, so I cut it. You're trading against yourself when technically nothing has happened, right? It's pretty much in the same thing. The other thing I would say is that you want to look at the larger time frames to help you identify the trend structure. So something that I share this a lot with people is you want to start off with, it's three main pillars, my approach. It's the environment, the trend structure, and then the setup that you use. The environment will tell you what buyers are in control, whether buyers or sellers, like that box range. Okay. If we're consistently above the 50% of the box range that we've been consolidating, like 2-3 weeks ago, right? It started in July. We were in like a 2 or 3 week range in ES and NQ. If we're consistently on the top of that range, you know that the buyers are in control. So the environment is telling you that it's bullish. We now need to see what I call a bull bear zone, right? Which is the zone in the middle of that consolidation that separates the buyers between the sellers. If we're consistently above that bull bear zone, the environment is bullish. Yes, bearish trades will work, but understand that those are mean reversion trades in a bullish environment. The second part of this is the trend structure. If you go to a middle time frame, for me, for example, I love the hourly. I like to call myself, even though I execute on the 5 minute in futures, I like to call myself an hourly trader because I look to participate in the hourly trend. And I just use the 5 minute to help me identify the setup that allows me to manage my risk. So if the environment is bullish, I then go to the hourly and I say, okay, what is the hourly trend structure like? I've now come to understand a specific structure around the 9MA. It helps me define whether we're in an uptrend or in a downtrend. Then through that trend structure, I say, okay, if we're in an hourly 9MA uptrend, I know that on the smallest time frame, on the 1 and 5 minute, we are going to be in an uptrend. If we're above, right, a hourly move higher, we're above a rising 9MA, technically, like in a daily time frame, we're in an uptrend. So my execution on the 5 minutes now is where I apply the setup. What setup do I need to apply to participate in that hourly time frame? Well, I have two setups. I have a reversal setup or I have a directional setup. Both are boxes. The box allows me to manage my risk, is where I know where this is where the systematic approach enters, where I have a fixed entry. I know where my entries will be at all times. I know where my stop will be at all times. I know how I will trail my long or short at all times. And I know what my position size will be at all times. It's percentage based. So if I'm trading ES and there's a 10-point range from between the entry and the stop, my size will be half of my normal size. If it's a 5 or 6 point spread on the trade, then I'll have a full size trade. So in doing a top to bottom approach, identifying the environment, identifying the trend structure, and identifying the setup that will allow you to participate in the trend that is benefiting from a bullish environment, you will often find yourself eventually participating in more trends on a 5 minute or even 1 minute if you're trading that on a 5 minute time frame that will sort of allow you or allow the market to do the heavy lifting for you. At that point, you align yourself with the trend, you align yourself with the bullish environment, and you don't find yourself shorting a setup that maybe looks favorable. And for some, the shorting setup may be, their A plus setup. But if you're a newer trader and you're consistently shorting as price climbs higher in a hourly 90 MA trend fashion, then you're going to be looking to risk one and maybe make half of that, right? When if you look for a directional setup in a uptrend while we're in a bullish environment, you're going to be risking one and potentially make 4 or 5 times your money in a consistent manner, right? So I think in giving yourself that freedom of thinking and processing the environment, then processing the trend structure on a 1 hour, 30 minute, maybe 4 hour time frame, and then using the 5 minutes to say, okay, we're in an overall uptrend. The trend structure is aligned with that. I will execute on a 5 minute setup. And so as you develop this strategy and this approach, write down the outcome, was it a profitable trade or not, and continue building on that. But I think leaning on the trend structure and environment will allow new traders to successfully close the learning gap.
You said a lot of great things, but I think the most important thing you said to new traders is the risk factor by being with the trend versus against it. Because this is where so many people make this mistake. And I think you nailed it in exactly the way you explained it. If you're going with the trend, you're risking one to make 2, 3, 4, 5 times your risk. And you're going against the trend, you're risking one to make half of what your risk is. And that's just the reality. That's the nature of the beast. Yeah, sure. Sometimes you're going to get, if you're trying to sell rallies in this market, you might catch a ripper lower in the NASDAQ one day where, you risked 20 points to make 200 because it just ripped lower. But ultimately, the NASDAQ's rallied thousands of points. The better way to manage risk has been to the long side. Now, we don't know when that ends, of course, but we're never going to be perfect at picking that top. That's why you go through your planning, your structure, right? Is to understand the environment. If I start losing on longs multiple times in a row because the market's now making a lower low or we're making lower highs and the trend has changed, you'll start to recognize that in your system, right? People don't want to go through that pain in between that, but that pain in between is a fraction of the pain you'd go through than trying to fade something day in, day out. I want to talk about a couple of things here. One is confirmation. I understand the entire structure that you've put together, but do you have something else like order flow tools? Is there something else that helps you with your execution in the very moments you're right about to get in? Or is it so systematic that look at these things are lined up? I know you talked about the 60-minute time frame as a primary, backed it down to the 5-minute, and maybe the 5-minute box is aligned with the 60 or however that looks. It's just in. Or is there something else in there that you're looking at? Like I use order flow tools. That's why I mentioned it. That says this is X position size, or always say big, small, or not at all. This is a big one. This is a small one. Hey, you know what? I like this trade, but something in the short term, this confirmation is telling me be really small or not at all.
I would say no. So to answer the question, no, I don't use any other than the indicators that I have on the charts. I don't use anything additional like order flow or I know some look at, there's so many tools out there to help you, but I don't. I simply, by now, my understanding of the trend structure is so well defined due to my both back testing and applying this approach both for day trading futures and swing trading that I've over time, you come to realize that because the market's all a fractal across all time frames, the sequence of this trend structure of the higher highs, higher lows, and lower lows, lower highs, they repeat themselves over time so much that they start to mirror each other. And through that, maybe call it an additional tool, but through the trend structure that mirrors each other, you eventually find out that the market moves in 3 directions when it breaks out, right? If it breaks out of a range, it's going to have a fast move up higher, or it's going to have a breakout, a retest, and sort of chop around right around the breakout and then move higher, maybe. Or it's going to have a breakout, consolidates, choppy, continues higher. Eventually, those are the 3 structures that will happen in a breakout. So when I am looking for additional confirmation, I sort of go back to my memory bank and say, okay, which one of these structures are we following? I go back through the library that I've created. I go back to in my head as I'm trading, but over time, eventually the patterns repeat themselves so much that you don't really need to think back. But the repetitive structure of that trend structure allows you to say, okay, this is what we're seeing at this time. If I know, for example, in the beginning of July, we broke out of a 2 week range, I already know, I have an idea. I don't want to say no. I have an idea of what the uptrend will look like and what the setups will look like for me because I've taken those exact same setups. They may differ in size, they may differ in a little bit in the structure, but they repeat themselves within that initial 2-3 day breakout. I know that after a big breakout like that, and we saw it when ES and NQ broke out, you were going to have a overnight consolidation. Let's say after the first day, it's going to come back into maybe take out pre-market lows, take out those lows, and then right at the open, it's going to reverse, and you're going to be nonstop higher for 20, 30 points. I know that because I've saved that structure over 100 times, and I've traded that structure over 100 times. So my confirmation is the large memory or the large library I've saved on that specific setup, in that specific trend structure, in that specific time, that I can just rely on that. And for myself, I don't need to show up and say, well, for me, hey, this is the order flow. I just need to see, okay, this is where we're at. This is the trend structure that we have on the 5 minute. This is what we have on the hourly. And my confirmation is for a reversal setup, if we have a third lower low on the 5 minute, based on our understanding of the 9MA structure, and we have, let's say, a divergence on RSI, I know that those new lows are invalid. I know that we took out the pre-market lows, and I'm going to enter my trade at the break of the lower high, which is what is my entry, and my stop goes at the lows. That's pretty much all the confirmation I need.
I'm impressed with you in so many ways. I think the plan and execution is so important. I think that more traders really should be more systematic like you. I look at order flow tools and say either you're an order flow trader or your trader has been doing this for a long time and you're using order flow as part of your strategy. Tricky to use it just as confirmation until you've been around for a while. And so just hearing how firm you are in your belief, which I think is so important because that confidence is what so many traders need. They need to have that confidence, whether they're right or wrong, Christian. I mean, it's difficult to say because I think some people are like, well, Anthony, what if I'm confident and the strategy isn't that good? Okay, well, I'd rather have you confident in your execution because you're gonna have much better stats and you're gonna be able to figure out how to fix it. If you got a weak hand and you aren't confident, you're toast. I want to talk about changing market environments because I know that everything we've talked about so far today is very systematic. It's planned, it's execute. I get it. Everybody talks about macro now, right? I mean, myself included, and I do it. I've said this many times. You're never going to get the macro environment from me. I'm not a macro trader, but the more I've been around, the more I find it interesting. The more I find that subconsciously, if I understand what's happening with earnings, and I know that the market's chasing higher projected earnings right now, or I know the Fed is cutting and the market's going higher because of that, or if there's something going on that I know is a macro backdrop, for me, subconsciously, it's helped me hold trades longer. I'm getting into swings, I'm into options. In those positions, I'm like, look, I've got that behind me as well as technicals. When I'm going against it, sometimes I'm like, maybe I don't want to be too aggressive here or hold this too long. Look at you caught it right, deal with it. Does that ever enter your mind? What's happening in the macro?
It does, because I do have an institutional background. I did work for companies who managed 9 figures. And so it does come to play. And one of the things that I've realized is that every year we have a theme. That theme can last on anywhere between 6 to 12 months. And if it's a strong one, we should see, and the technical background of the market supports it, we should see that theme continue to play out. So I rely on that for both swing trades and day trades because I know that the day trades can potentially lead to higher R multiples on the trades that I take because we are in a bullish environment that's guided by a theme that I focus on, right? This year has been AI. Last year it was oil. In the first 6 months, 2021 was mostly safety and large cap. So every year there's a theme that's my macro. I know also the potential or the increase in probabilities for a rate cut. I know that's a factor here in the last few months. It does play a factor. It does allow me to hold my swings longer. It does allow me to say, hey, on swing trades, I want to focus on semiconductors, right? Then small caps. But now we saw a rotation. I want to focus on that sector, but it influences day trading in futures so much because I know that we have a lot of institutional and retirement capital going into the markets for into these funds, and there's nothing else like that, right? You have trillions of dollars going into these companies, going into the market, going to the semiconductor index. And to me, wherever the semiconductors go, the market will follow, right? So that's my macro, at least for me. And I do focus on that through that filter.
What about zero DTEs? That has become something that I watch on a regular basis now, especially towards the closes, because Mentor Q, who's been on this show, I have found their work to be very helpful and beneficial to me. And just understanding what's happening, with these zero DTEs, as a futures trader for a long period of time, and you've been doing this a long time now as well. These closes have been crazy. I think that it's elevated them. I don't know that it's changed directionally the way I'm looking at things, but I do know this as someone who loves the end of the month and how the end of the month trades. You get these big zero DTE days where the end of the day is like at the end of the month. It's a race to the finish. How much are you watching that?
I just started into it actually. I mean, just I think it was yesterday or not yesterday, Friday. That end of day drop that came out of nowhere in the last 30 minutes.
Exactly.
Those zero DTE has exploded. I don't know, maybe 1,000% or more. So I just started watching it. What I started looking at is I found that as how I shared how one of the setups that I look at is for an overnight low to get taken and then price reverses. Buying or entering a call into that overnight low or right where nobody wants it is probably going to be something that I start to apply and execute on because I like the idea of buying it when nobody wants it and then getting rid of it when it's up 5x, 3x. So I just started getting into it, but so you probably know a little bit more on it than me.
Yeah, it's the prices. When you look at these gamma levels and how they're moving the markets into the close, I've noticed very little to nothing on the opens. But as I'm sitting in swing positions and I watch these closes, they could be magnets to some prices or magnets away from them, and they just race to that next level. Then all of a sudden you see big volumes come in the futures at these just round numbers, which, I did not see as much in the past. And it's become something that's become more prevalent now. And so it's noticeable, right? And I don't trade the closes that much. I don't know how much you do. I'm not super active on a close. The only thing I'm doing is managing a position at that point in time. Very rarely am I entering a position before the close. If anything, I would enter it after the close. So it's not changed my life too much, but it is very interesting to see how much of a factor they've played. And I'm telling you too, Christian, I've even started to notice it in gold and oil. And I think it's just going to be one of these things that just continues to grow because I believe that not only the retail, but the institutional clients out there, it's going to be ways for them to trade these markets for minimal dollars in short amount of time, right? So I just think that if they could make a buck doing it, they're going to do it. And so I think it's going to be very interesting going forward. I think it's something we all need to keep an eye on as traders. And it may not impact us on a day-to-day basis, but there's going to be times where you have to kind of know, be like, what's happening here? It's not news. That's a zero DTE. I want to talk about an election year. You come from the institutional side. We all know the absolute tragedy that we've recently seen happen here in this country. Not to talk political about it, but we are in a political time period now. Anything with your institutional background that maybe gives you a leg up or something that you're looking at coming into this election that says either, hey, this is something I should be keeping an eye out for, or you just say, you know what, as we get into this election, maybe I'm trading less. Maybe this matters less to me. Just any thoughts?
The only thing that we would rely on the institutional side is historical data on how the S&P 500 did, any of the major indices did during these election years, either a historical data set that says, okay, this is the average performance of the election year, or influenced by if the last 3 months of the prior, if they were all green, what does that mean for the election year? Right. So data sets like that is what they would mostly look at to help them understand what the potential outcome can be in the beginning of the quarter, halfway through the year, and then the last 2 quarters. So when I think like that, I say, okay, I know that we will typically get a July August rally, and then from there start political volatility. Maybe sooner with what's happened, but it is typically during August where we see a high come in, especially when we're this extended. We see a high come in and then we do pull back into September. We have seen this over the last 50 years. There's some data sets that I have for this year that do show that there is a 5 to 7% pullback into September, which would make sense being how high we are. And so I lean on that and I still trade. I'm strictly and disciplined to respecting the technicals, or else I would let my opinion and bias get in the way and cause me to miss continued uptrends and rotation into sectors that have not moved. So I do focus on that and say, okay, the market will remain strong until September. I will need price to confirm that we will deviate from that data set. And that's by either getting back below the daily 21 MA in the major indices. And then at that point, I do need to get defensive for my swing trades. And then the environment will probably switch for day trading as well.
Yeah. So it all leads back to price tells us whether or not this is really taking place or not. And it's funny, Jem Carson, I think you know who he is too. He's on Twitter. He talked about weakness mid-August coming into September. And that's coming from the option side, the flows. And so it does get really interesting is because this market, I wrote in my note recently on how, the market's not been kind to the shorts, but it doesn't mean we can't rotate at some point, and it's a market I don't really look to be short in. I know you don't either as well right now because it's not the environment for it, but at some point, nothing's linear, right? And, it's just a matter of goes back to managing your risk. At some point, it may make more sense to be a little short versus being long, and who knows when that comes. And maybe never. This has got to be, I was going to ask you this next is really when you look at the time you've been trading, have you ever seen a market like this, a market this strong that really pushes everything off the way it does?
No, I would say 2020 was up there, but we've sort of been in a shorter time frame. We've just been aggressively staircase up, and it's definitely strong. It's a lot of capital flowing in. I mean, I always think on the institution side, a lot of capital must be flowing into the semiconductor space, utilities in the semiconductor, right? Anything that amplifies the potential revenue of the semiconductor space. So I say, okay, we're not just seeing a bubble. We're probably seeing a AI revolution if all this capital is going into not only the chips, but in utilities, into infrastructure that's helping that create a sustainable or helping it have a sustainable growth, then it makes sense to me why we're seeing this kind of strength. But it's also kind of scary to see, okay, what kind of pullback will we get eventually when it comes?
Yeah. I mean, have been doing this for a long time. This doesn't remind me at all of the previous bubbles. I think what's the most unique about this time is, like you said, it's an AI revolution. I think it's something that really potentially has legs because we've really already had several bear markets in a short period of time. I remember the first 10 years of my career. I mean, the only bear market we really had was 2000 and then 9/11. Accelerated it lower. And then you had years of nothing. That was probably one of the most boring times. And then all the way up to 2008. But then since 2008, think about how many major pullbacks we've had. We've even had even that flash crash. We've had all sorts of things happen where we've had massive amounts of pullbacks. And so, COVID not too long ago. And so I think that when you really pull it back, a lot of times I'm sitting back looking at it going, this thing really could go, man. It could go a lot further than you think. It already has, I think, in some ways, but even more so going forward. Final thoughts for today, just the key factors to your success. I mean, we started off today with the amazing adversity you fought through. I said it at the beginning. I'll say it again. I mean, I just admire your strength. I think that you're an incredible person. You're a positive person, and you found your way through struggles in health. You found your ways through struggles in trading to come out on top. We'll say you have fought through it, and you say it's a continued journey. What are the key factors to your success, and some words to others out there that are going through some struggles? Because we all are at some point.
Yeah.
In order for them to propel forward like you.
I would just say, look, it really comes down to continuing to make the choices that need to be made when faced with other opportunities. I was faced with other opportunities in college, as many of my friends partied, but I was getting home from working at a bar at 2 in the morning. I was getting up at 5:30 in the morning to learn how to trade. The choices to sacrifice the jobs that I needed to have while I was learning, the choices to continue while my health deteriorated again and I needed a second kidney transplant, right? Just 2020 to 2022 were difficult years for me for my health. My kidney function came down a lot. And so I needed to continue to make the choices that will allow me to reach where I wanted to reach. I think if you continue to do that and you don't say, okay, or when faced with that other opportunity, make a choice that's going to deviate you from the goal you originally set out to have, then you will reach it through consistency, through applied effort, through the right filter. To me, it's what I'm doing and the outcome that I've had and the outcome that I envision myself having is because I've created a systematic approach for my life as well. I've identified the parameters that will allow me to have no other outcome than the outcome I designed, because the parameters that I'm following and applying in my own life gives me that outcome, right? The same as trading. If you create a system and approach with specific parameters, and as long as it has positive expectancy, and let's say for every dollar you risk, you're going to make 30 cents over 100 trades, you're going to make 30% on your money. That is the outcome of the technical entries and exits that you've identified and you set out, put in place. If you do it in your life as well, and you apply it and you continue to make the right choices when faced with other opportunities, you have no choice but to reach that outcome and find the success that you want to have. Create the life that you want to have for yourself, for your family. And I truly believe that you will reach it. There should be no other outcome for you except that.
Love your positivity, Christian. Where could everybody go and learn more about you? They got to follow you on Twitter. You're great. I'm going to put a little plug out there for you on Twitter. I mean, you're probably one of the most underfollowed guys out there who should have a ton more followers. But give us Twitter and a website.
The website's being rebuilt, but it's paradigmshifttrading.com. They can reach out there, or they can follow on Twitter at trading_boxes and reach out if they have any questions. I try and share a lot on Twitter. Whatever questions that they ask me, I'll share it. Those are the two best ways to reach out.
Absolutely. And, I appreciate you coming in my free Discord. You're always giving alpha there as well. It was an absolute pleasure and honor, and just love this conversation today, Christian. Thank you so much for coming on Futures Radio.
Likewise. Thank you. It was an honor as well.